Did you know you could be paying taxes on up to 85% of your Social Security benefits, money that you already paid taxes on when you worked? And if that sounds unfair, you're right. But here's what no one told you. This tax wasn't supposed to hit most retirees. It was originally meant for only high earners, yet today nearly half of all retirees are paying this tax. And now Trump has proposed eliminating Social Security taxes altogether. But before you get too excited, there's something you need to know. While getting rid of this tax might sound like a huge win, it comes with a major catch. So today I'm going to show you exactly how this tax became a problem, what Trump's plan could change, and most importantly, what it means for your retirement. Because whether or not this tax is eliminated, one thing is for sure, you need to be ready for what's coming. So let's break this down, starting with the 40-year-old mistake that turned Social Security into a hidden tax trap. You might be thinking, okay, Social Security benefits are taxed, but how did we actually get here? And most importantly, why are so many retirees paying a tax that was originally meant for high earners? Well, back in 1983, Congress decided that some retirees should pay taxes on their Social Security benefits, but only if they were considered high income. So they set an income threshold. If your provisional income was more than $25,000 as an individual or $32,000 as a couple, you had to pay taxes on your portion of benefits. Now, at the time, those numbers seemed reasonable because in 1983, $25,000 was worth over $80,000 in today's dollars. So back then, it really was a tax on high earners. But here's the problem. Those income limits were never adjusted for inflation. And that means today the threshold is still $25,000 for individuals and $32,000 for couples. So instead of just a small percentage of retirees paying taxes on their benefits, we now have nearly 50% of all retirees paying taxes on Social Security simply because Congress never updated the rules. And here's where it gets even worse. This tax was never supposed to grow, but Congress didn't stop it because they didn't want to. In fact, the way they set it up, the number of retirees paying this tax was always going to increase automatically. It all comes down to something called bracket creep. Now, bracket creep is what happens when tax thresholds stay frozen, when inflation pushes more and more people into paying the tax over time. And when Social Security taxes were first introduced in 1984, only about 10% of retirees had to pay them. But today, nearly 50% do. Not because they're making more, but because inflation did the dirty work of Congress. Most everything else in the tax code, income brackets, deductions, even Social Security benefits themselves get adjusted for inflation every year. So if you feel like you're paying tax you were never supposed to, you are absolutely right. Now, it's not a new tax law. It's just a tax that keeps expanding year after year without anyone actually voting on it. And that's why some people call it a stealth tax increase, because even though Congress hasn't officially raised taxes on Social Security, they've managed to collect billions more from retirees just by letting inflation do the work. And this is why Trump's proposal to eliminate Social Security taxes is making headlines. Because for many retirees, this isn't just about tax relief. It's about fixing a broken system that's been quietly siphoning money from seniors for decades. But here's the big question. If Social Security taxes are eliminated, then what happens to the program itself? Can we really afford to cut this tax, or would that just speed up Social Security's insolvency? Because on the surface, it sounds like a huge win. If Social Security taxes are eliminated, that means more money in your pocket, potentially thousands of dollars a year depending on your income. But before you celebrate, there's something you need to know. This accounts for $1.5 trillion in revenue over the next decade. And Social Security is already facing a funding shortfall, with estimates showing the trust fund could run out of money by 2035. And according to estimates, eliminating Social Security taxes could push the program into insolvency one full year sooner, meaning benefit cuts could come even earlier. Now, to be clear, that doesn't mean Social Security just disappears, but unless new funding sources are found, benefits could be reduced by about 75% of what's currently promised. So while eliminating Social Security taxes might feel like a win today, it raises an even bigger question. Would you actually come out ahead in the long run? And that's why some experts argue that cutting this tax is just a short-term fix that could create a bigger problem down the road. So what should you be doing right now to prepare? Because no matter what happens with this proposal, one thing is certain: the tax system is always changing. And if you don't have a strategy in place, you could end up paying even more in taxes elsewhere. So here's what I mean. If Social Security taxes are eliminated, that revenue needs to be replaced. And history tells us that when government cuts one tax, they usually find another way to make up for it elsewhere. So maybe that means higher capital gain taxes. Maybe it means changes to the RMD rules, or maybe it means new surcharges for high income retirees. But there are a few things you should be doing right now, regardless of what happens with this tax. First, if all your retirement income is coming from taxable sources like 401ks, pensions, or Social Security, you have very little control over your tax rate. But if you build in tax-free income sources like Roth IRAs, you can create flexibility in retirement. And if you have traditional IRA or 401ks, doing strategic Roth conversions before tax laws change could save you money later on. Because while Social Security taxes could go away, tax rates on other income sources could go up. And a Roth conversion lets you lock in today's tax rates while reducing your taxable income down the road. Now, most people only think about taxes in April, but the real tax planning happens years in advance. But now you know the truth. This tax was never supposed to hit middle-class retirees, but because of a decade-old mistake, it has. And Trump's plan might fix it, but whether or not it passes, one thing is clear: the tax system is changing, and those who understand how to adjust will keep more of their hard-earned money, while those who don't could end up paying more than they should. And at the end of the day, retirees who win aren't the ones who try to predict what Congress will do next. They're the ones who will build a strategy that works no matter what happens. And if Social Security taxes do go away, you want to be in the best possible position to keep more of your money, and that means having a tax-efficient income plan. So if you want to learn how to generate $100,000 of tax-free income in retirement without relying on Congress to make the right decision, then click right here. I'll walk you through exactly how to do it step by step. I'll see you over in that video right now.